Welcome to Real Estate 360, an informative and engaging hour discussing everything you need to know about the world of real estate. Your host, Tom K. Wilson, provides you with insight and guidance from his years of experience as a successful real estate entrepreneur on how to buy, sell, finance, and invest in real estate, and much more. Now, here's your host for Real Estate 360, Tom K. Wilson.
Well, nice to have you back. Thanks for tuning in to our Real Estate 360 program, your number one source for all of your real estate needs and education. We're broadcasting from the number one business radio station in the San Francisco Bay Area, KDOW AM 1220, the Wall Street Business Network. I'm Tom Wilson, your host for the 2 p.m. Wednesday edition of Real Estate 360 that comes to you daily, Monday through Friday at 3 p.m. and also at 2 o'clock on Wednesday and Thursday, and with my co-host Laurie Graymont and Joe Kuchera. If you can't make the live shows, you can catch our podcast on RE360Radio.com, and you can catch my programs on TomWilsonProperties.com or on iTunes or on YouTube. We have back with us today Richard Crouch, our regular guest, who's going to help us take a look at the market. And today's key topic is how we can increase inventory of real estate products, which everybody's wanting and everybody's talking about. Richard is the top producer with Alain Pinel Realtors, Saratoga. He's an investment advisor representative for Transamerica Financial Advisors. He's a Silicon Valley entrepreneur who took his skills from that industry over into real estate like many of us techies did here in Silicon Valley. You can get a weekly economics report, which is a nice, quick one-page read and summary of what's going on in the world of economics as it relates to real estate by going to TomWilsonProperties.com and requesting that, signing up for the weekly newsletter. Also, we welcome your questions and suggestions for subjects and topics at any time. You can also ask for a report that we have on how to select the best metros and the best products in the United States. So we will get on with our program, and welcome back, Richard Crouch.
Hey, good to be here, Tom.
Thanks for being back, and today we're going to talk about the updates in the marketplace, but very interesting and timely topic. Everybody is worried about and talking about and the very minimal inventory, not just here in Silicon Valley or Bay Area, but across the country. So you have a lot of, I know, good thoughts about that and some good data about what's going on and things that people can do about it to help increase that. So look forward to that part. So to get started, let's go talk about what's changing here in the marketplace and let everybody hear a little update.
Yeah, well, in fact, it's kind of funny because we're used to thinking that Silicon Valley is so unique, and it is in so many ways. No question about it. The Bay Area is unique, and in so many ways. You tend to assume that the rest of the country is pretty much the norm, right? What is really interesting is this whole inventory thing. It's a nationwide issue. And so it goes beyond Silicon Valley.
And of course, our business, Wilson Investment Properties, is certainly a good example. We've been providing properties from Texas, and the biggest problem we have is finding sufficient product for our clients while keeping the standards and qualities up.
And I can assure you that's a problem for real estate agents as well, because you can't sell it if you don't have it, right?
Yep.
And
hard to sell futures in real estate.
Yeah, that's right, exactly. So let's talk about some statistics just to get everybody kind of caught up. And all this is through April of 2014. May data won't be available for another couple of weeks. But in the U.S. as a whole, total existing home sales in April rose 1.3% to 4.65 million homes.
Which is trivial.
Right. Yeah, exactly. Okay, and up from 4.59 million in March. And they are 6.8% below the 4.99 million unit pace in April 2013. So we definitely have lower volume. Now, the national median home price right now in April, $201,700. Single-family homes, $201,100. And condos and co-ops, $205,500, which is pretty interesting that those average numbers are the same for single-family homes.
Yes, it's very unusual situation.
Condominiums, very, very unusual. Then two other points of data nationally in terms of the geographic aspect of it. In the sales, 1.08 million is the median and price. Is the median in volume, and then 291,200 in price. In the Midwest, the median price 157,000. Sales 1.03 million. In the South, 173,000 median price, 1.94 million. And in the Northeast, median price 244,000 with 600,000 sales.
Can we take just a few second detour here? That's fascinating that the median price condos, townhomes is about the same as it is homes. I wonder what that's about. Do you suppose that's because there's more condos and townhomes in cities and where the prices are higher, and therefore it helps mitigate the averages of houses in the middle America?
Yeah, I think that's part of it. I think the difference in volume also has some impact on that.
Yes.
Yeah, just like the median price, you have
affected by what sectors.
Yeah, you have to understand if the higher priced homes are selling, the median price is higher, but it doesn't mean the lower priced homes are higher. So I think it's similar. That's
just a intriguing stat.
Yeah. And one last thing on the national level, from April of 2013, months of supply of inventory was about a little over 5 months. In March 2014, dropped a little bit to 5 exactly, and in April of 2014 actually has come up close to 6 months. So the amount of inventory in a market is considered normal when you have 6 months of inventory. Okay, so in that regard, even though the inventory is still hard to find, it is not that out of whack in the rest of the country, but it is still a problem to a degree. Okay. Then in the Bay Area, in April, the median price was $768,110 in April, up from $724,000 in March, and then 1 year ago, $685,530. So
insane,
almost $100,000 increase in that 1 year. As far as sales volume is concerned,
and that was all Bay. That was Bay Area, right?
That's Bay Area. Yep. That's San Francisco Bay Area. Sales month to month up 26.6%. So from March to April, it went up a pretty big number. The number of sales in March wasn't that high. Year over year, minus 0.3%. So the volume is a little bit below what it was a year ago.
So we had a little bubble there, and we're still essentially flat over a year. But
yeah, and 6% on prices, 6% up month to month from March, and year to year, 12% higher than the year before. Okay. Also, an interesting statistic for the Bay Area has to do with the median single-family residence, the time index, and also the median time on market. Basically, the median time on market has gone up in the Bay Area from 45.2 to 47.9 days. Okay, so it's gone up a little bit, but not a big change.
Nope.
Okay, then California, what I've got here, and I'm going to talk about Silicon Valley here in a minute, Santa Clara County. California, this is the California Housing Market Outlook forecast through 2014. I'm going to read the numbers for 2013 and then tell you what the forecast is for 2014.
Is this CAR, Richard, or what's the source?
This is CAR, California Association of Realtors. Okay, 2013, 413,000 in terms of resales. 401,014. So lower number, less volume, 3.1% drop from 2013. Median price in 2013, 407, and dropping to going up to 440,000. So we had significant appreciation in the median price.
10%.
8.2 to be exact. And 30-year family, 5.3% in 2014 versus 4% in 2013. And so, basically the 2013 was the volume and the price, and everything has cooled off in 2014, which I think everybody senses that. And then finally,
and that was the whole state of California.
Yeah.
Yep.
Okay. Then finally, in Santa Clara County, May 2014, the median home price minus 2.4% at $825,000 compared to $845,000 the month before. Year over year, plus 7%, which was $771,000. The average sales price, $1,091,000 in May, was $1,096,000 in the previous month, and year over year last year was $974,000. Okay, and then volume, 5.9% increase in May to 1,233. The previous month, 1,164, minus 7% from 1 year ago of 1,330. Okay. And pending sales, 990, which is down 20% in May from March. So the market has really cooled off there, and pending sales down from 1,236 and down minus 33% from last year, which was 1,479. Okay?
Okay.
So that gives you a pretty good feel that things have cooled off a bit.
Okay. Any more stats there before to wrap up this segment?
Well, I think probably mention that in case of good news, of course, foreclosures down 35%. Basically 9 versus 14. Year over year down 62%. So that testifies to the better health for homeowners, which is a very, very positive sign. There were some increases in foreclosures, however, in May, 14.3%.
Okay. All right. We've got Richard Crouch with us here today, our regular guest, who's bringing us a market update. Richard's from Alain Pinel Realtors and also investment advisor representative for Transamerica Financial Advisors. And we're discussing the market across the country and all the way down here to Silicon Valley, where we're broadcasting from, what's going on with that. And we're going to wrap up with some more stats when we get back. And then we're going to dive into the inventory problem and situation and what you should do about it. So this is Tom Wilson with KDOW. 12:20 a.m. We'll be right back.
For more information on today's program, visit RE360Radio.com. That's RE360Radio.com. Welcome back to Real Estate 360, streaming live on iHeart, TuneIn, and KDOW.biz. For more information on today's topic or guest, just visit RE360Radio.com. That's RE360Radio.com. Again, your host for today's edition of RE360 Radio, Tom K. Wilson.
Thanks for being back with us today. We're having the studio with us Richard Crouch, who is a regular guest, a Silicon Valley entrepreneur, turned real estate many years ago, a top sales agent for Alain Pinel Realtors and investment advisor representative for Transamerica Financial Advisors. We're discussing, Richard's bringing us up to date as he often does on what's going on in the marketplace, and we're going to wrap up some interesting stats about that, and then we're going to dive into the whole inventory issues. So Richard, continue if you will, please.
Yeah. So the one item we didn't get to cover in the previous segment, average days on market. It's always interesting to know if you do list a home, what is the average time that it takes to sell. And actually 2014 and 2013 look like almost carbon copies of each other. In May of 2014, 20 days on market for a sale. Previous month, 22 days. 1 year ago in 2013, 21 days. And so what that means is that here we have a market that was restricted on inventory. So when homes do come on the market, they're still getting multiple offers. Not quite as many.
Not quite as much. I'm not as active in the local market as you are,
right.
But everything I'm hearing is that it's not as many. So we're sad here when we have a really cooled off market and only has a few multiple offers, right? Where that's a hot market in most places in the country.
Well, I mean, we just we made an offer on a house for a buyer just about 2 weeks ago in San Jose 95117, which is just south of Stevens Creek and just west of Winchester, and the asking price was $875. It was a nice house in a nice neighborhood. Turns out there were 30 disclosure packages checked out, and our buyers were willing to go to 900, probably would have gone to 925 if they knew they could get the house, okay? But my partner and I, Candace, we were doubtful because we knew with that many disclosure packages checked out, that's an indicator of offers. And sure enough, 15 offers.
So half of the packages resulted in offers.
And that's a percentage that's pretty common. Maybe worst case 1/4, but most of the time close to half. And our $900,000 offer, it was not even close enough to be competitive to even call us back. So it probably sold. We felt 925 to 950. I wouldn't be surprised if it went for more than 950.
Just a few weeks ago, I assisted a friend in getting a first home. It's in Willow Glen. It was on the market for $1,050,050, and they first time shopping. They saw 4 houses. They liked this one. They wanted it. Gave them advice that they needed to lead the market. That they would probably get multiple offers. Here it is, over $1 million house,
mm-hmm.
and indeed they wanted it, so they recommended they offer $1.2 million. It's $150,000 over asking.
Right.
There were 8 offers, and they won by $1.
Wow.
So we may not be quite as hot, but it's still a pretty crazy market here.
Yeah, well, that's great
because there's no inventory.
Yeah. Well, exactly. So one last statistic, and then we'll delve into the inventory. What are we doing about the inventory problem in the industry? Because it's not actually now in the hands of buyers and sellers. Real estate industry has to do some things to encourage people to buy and sell real estate. We'll talk about that in a moment. The last thing here is an interesting chart where, as we talked about earlier, the volume of sales from 2005 dropped, significantly down into 2009 and 10, and has risen some, but the volume is still way down. The percent change is gone up, but negative direction. So volume of sales, which is natural. If you don't have inventory, you're not going to have the volume of sales.
Sure.
Okay. Sure.
So, however, what's interesting is that the total dollar volume is the same because the increase in value has mitigated the decrease in the volume.
Precisely.
Well, we have with us Richard Crouch today, back in the studio, who's given us a nice market update. When we get back from this break, we're going to dive into the whole inventory issue and interesting aspects about that. This is Tom K. Wilson on Real Estate 360. At KDOW 1220 AM, Wall Street Business Network. Stay around and come back and learn some things about their current inventory.
For more information on today's program, visit RE360Radio.com. That's RE360Radio.com. Welcome back to Real Estate 360. Streaming live on iHeart, TuneIn, and KDOW.biz. For more information on today's topic or guest, just visit RE360Radio.com. That's RE360Radio.com. Again, your host for today's edition of RE360 Radio, Tom K. Wilson.
Thanks for staying with us. Richard Crouch in the studio with us today, and we are talking, getting ready to dive into the issue of inventory. Richard Crouch is a Alain Pinel Realtor top sales producer and an investment advisor representative for Transamerica Financial Advisors. So, Richard, let's talk about this inventory issue. My gosh, my good friend Sean O'Toole with Property Radar and Foreclosure Radar, I remember telling me in early 2008 when the sky was falling and everybody, including Wall Street Journal articles, were talking about the gates opening up with a flood of inventory coming out. And he was the first one I ever heard and the most consistent one that said it will never happen. And it will be political pressures will keep the inventory down. Boy, here we are all these years later, 6 years later? And he's still correct.
Well, he is, and it's even more than political. It's just good business from a banking point of view.
Yep.
I mean, why would you flood a market with bank-owned properties? You're just going to reduce your
hurt your balance, your balance sheet,
big time.
It hurt your balance sheet.
Yeah.
But of course, since I mentioned politics, that's political too, because the Feds changed the mark-to-market rules to protect the banks. So previously you had to mark to the market. Now they took that away so they could keep the value of the loans on the balance sheet at whatever they issued them, not what they're worth today. But of course, as these prices are being pressed up partly from low interest rates, we're seeing less and less of that,
right,
of the upside down properties.
Well, I think the issue is that investors as well as potential homeowners are finding it tough to buy something, and it can be demoralizing. It is a problem throughout the country, but it's especially bad here because we're landlocked. There's no open land. Builders can only do so much, and even up in San Francisco, where there's now a resurgence of high-tech companies in San Francisco, Twitter, Facebook, Google, LinkedIn, and others, the actual demand for housing units in San Francisco right now is between 30 and 50,000 units. And the current projects in place are only going to produce between 6,000 and 10,000 units. So
big gap.
This is restricting the growth of south of Market even in terms of, which, for the people in Santa Clara County, maybe that's a good thing, right? We don't want everybody to move to San Francisco. But anyway, the whole inventory issue is one where those of us in the real estate industry, we need to step out of the box and come up with how do we encourage people for the right reasons that will benefit them to sell the real estate properties that they have. Well, the single biggest group where that focuses is all about baby boomers, because we have a lot of baby boomers who own not only their own home, but multiple income properties, and they're looking at trying to figure out what is their lifestyle going to be for the next 10 to 20 years. And a lot of the traditional arguments are falling on deaf ears. Sell now, buy up, sell now before interest rates start decimating the buyer pool. Mm-hmm. Buy more investment real estate, educate property owners on the benefits of moving up at a time when rates are low, etc. That's all being ignored. So in the next segment, I'll tell you what we're trying to do to fix that. Okay,
good stuff. Richard Crouch with us today in the studio. We'll be back in just a moment talking more about inventory problem and inventory solutions. Tom K. Wilson, thanks for being with us on Real Estate 360. We'll be back in just a moment on KDOW 1220 AM, the Wall Street Business Network. Stick around. We'll be back to discuss some more on the real estate inventory issue.
For more information on today's program, visit RE360Radio.com. That's RE360Radio.com. Welcome back to Real Estate 360, streaming live on iHeart, TuneIn, and KDOW.biz. For more information on today's topic or guest, just visit RE360Radio.com. That's RE360Radio.com. Again, your host for today's edition of RE360 Radio, Tom K. Wilson.
Thanks for being with us, and with Richard Crouch here in the studio, talking to us about inventory. So let's continue with the why people holding real estate, what the advantages are of letting go of that real estate, and what other things can be done.
Yeah, so we said earlier that, talked about baby boomers, Tom. There's 76 million of them in this country, and about 12% in California. So we're talking about a very, very big number. And those in California, of course, are overall more affluent. Most of that wealth, owning of real estate, if you will, is in the metropolitan areas, not in the agricultural areas. So let's talk about baby boomers. Most people who are baby boomers today are really wanting to retire. They've had a career, a successful career. They've raised a family, and they're looking to enjoy the next 20 or 30 years. Everybody's living longer, which is a good thing. But living longer means you've got to figure out how to take that money that you've saved and stretch it over a longer period of time.
Indeed.
And hopefully not prohibit your estate from being of some value to your heirs.
Yeah, most people don't want to reduce their standard of living. Most
Right.
people have to, but it's not their preference.
Right, exactly. So baby want to retire, but many of them are rich in real estate on paper, their
Yep.
home that they live in, and also income properties, which have always been the investment du jour in Silicon Valley for the last 40 or 50 years. And
was for me.
Yeah, and for the right reasons. Real estate
Yep.
is overall considered to be the best overall investment asset class you can invest in because it's tangible and it's real, and it never goes out of favor. So what the boomers want to do, though, is they want to downsize. If they're in a 5,000 square foot home, they don't want to be in a 5,000 square foot home anymore. The children are gone. I know that my wife and I, we had a 5,000 square foot home, and we ended up, after our children left, talking to each other over the intercom from 3 different floors difference in the house. That's crazy. They want to right size.
I got to confess, I still do that.
Yeah. They want to right size. They want to move closer to their children. This is really the big one. They want to move closer to their children and watch their grandchildren grow up. And most of the children, a lot of them have moved out of the Bay Area even. So, but the problem is they can't. And why is that? Well, first of all, they need the rental income, cash flow to live. They've become very dependent on rental income cash flow.
And if I may interject, many people, like I did, invested next door here, where real estate was exciting, got nice appreciation, but the cash flow is lousy here. So,
Right.
What people who are in that situation need to do is to understand that now, after all these years of holding it, there are other places that you can exchange into that give better cash flow.
Right, exactly. And the other problem is that they fear the taxation aspect. If they sell their real estate, their fear, it always gets overblown, obviously embellished in one's mind, but they're certain they'll get clobbered with
certainly is a negative. Yeah,
clobbered with capital gains tax, investment income tax, Medicaid tax. But worse yet, they are not selling because they really don't know what would I do with the money if I did sell.
Yep.
And so they need help and guidance in that regard. And that's where those of us in the industry are putting together some programs to help boomers understand how to make that work, that it is possible to move assets from real estate to other asset classes and even buy more real estate, like a 1031 exchange, for example. But they can sell real estate and move that money, some of that money, into tax-advantaged income-producing products that will help them secure their retirement. And one thing that is actually quite new is the fact that up to now, the 1031 exchange has allowed you to sell your real estate, and if you buy another property that's worth more, you defer the capital gains tax essentially forever if you hang on to that replacement property forever. Okay.
If I might interject, equal or more.
Yeah. Equal or more, exactly. And so sometimes when somebody does a 1031 exchange, they can't refine the replacement property in time because there is a 6-month window you have to close within that period of time.
And in this low inventory period we're in, that is a problem.
Right. And so what the 1031 exchange companies do is they try to find like an REIT, a real estate investment trust, and maybe commercial properties to provide what they call the boot, cover the boot. But it's now possible with something called a structured sale, an installment sale that is tax deferred, to be able to sell real estate without actually having to buy another property and completely exclude the taxation until it's paid out over time in installments. So basically, for baby boomers, we are trying to educate them on what the options are, because quoting a CPA down in Evergreen Valley in San Jose, he said only 1% of the baby boomers in their practice have a financial plan, and all the rest are convinced that the equity in their home and Social Security is all they're going to need for retirement. And there's universal agreement, bar none, that is sadly not true.
Absolutely.
That there is a need for more.
Most people don't even realize that on their own home that they can do things like move out, rent it for 2 years, then do a 1031 exchange into something else that produces income, and then move on from there. There are lots of ways to avoid this tax issue, like with a structured sale,
right.
1031.
Yep. And again,
many people don't know about that. I'm shocked.
Right.
No, but.
And so and we did a deal like this last year where 6 income properties were sold and provided a wonderful home for 6 home buyers. And we're working on doing a lot more of that. And baby boomers are starting to figure out that that's a smart strategy. And
professionals in the business, I agree, need to be teaching the clients about these different avenues and different options that they have. We'll be right back to wrap up with Richard Crouch here in a moment, who's here in the studio talking about the inventory problem and inventory solutions. Tom K. Wilson with Real Estate 360, KDOW 1220 AM, the Wall Street Business Network. We'll be right back.
For more information on today's program, visit RE360Radio.com. That's RE360Radio.com. Welcome back to Real Estate 360, streaming live on iHeart, TuneIn, and KDOW.biz. For more information on today's topic or guest, just visit RE360Radio.com. That's RE360Radio.com. Again, your host for today's edition of RE360 Radio, Tom K. Wilson.
Thanks so much for being with us today. Richard Crouch is with us from Alain Pinel Realtors and Transamerica Financial Advisors. Gave us a nice market overview, and we're talking about inventory problems and inventory solutions. And, one of the Richard, let's wrap up a little bit with kind of reasons why it is a good time for people to put their properties on the market and sell. One little thing I want to put out there is one of my favorite stories about market timing is that the grandson of the Lafitte Rothschild family, that at one time was the most wealthy family in the world, was asked to what single thing did he attribute his family's great wealth, and they said by selling too soon. So I think we're in that situation for many people now, where they they think, well, maybe uncertain of where they're going to put their money. They're concerned about maybe I should wait until things go up more. To those, you would say, what would you say to those people who are waiting, holding back?
Yeah, caution. Let's real quickly then. So right now is a great time to sell. That's because demand exceeds supply, clearly. And we have enough visibility in the market to know that nothing's going to go crashing down in the immediate future, and certainly not in the next quarter, and probably not even in 2 quarters. So if you're holding off moving up or buying your first home, you could miss an opportunity for sure, okay? For the baby boomers that we were just talking about, the big thing to consider there, in addition to moving some of the money that they currently have in real estate into other asset classes, which are tax advantaged and create income, is simply the fact that they cannot afford to go through another black swan market, such as 2008 and 9, or even the dot-com crash, especially when most of the people who need to be considering to sell some of the real estate they're holding, income properties and their own personal residence, baby boomers again, that they are the ones who basically on paper are fairly wealthy, but off paper are not, and they don't have cash flow. If they get hit, if the value of their real estate gets hit in a big way, they have nothing to turn to maintain the quality of life. So you really have to think hard about that when you're a baby boomer and trying to figure out the next 10 to 15, 20 years. That's our job, is to help people in the market make those decisions and make them as best we can.
Indeed. Richard, thanks for being with us. As always, how can people reach you if they want to talk to you?
Okay, so the website is Richard and Candice, KANDIS.com. And the number to call me directly if you want to talk or meet or just whatever the case may be, have a question about the program, 408-391-1231. We'd look forward to that opportunity to help in any way we can. Have a great day.
Thanks for being with us as always. Remember, you can go to TomWilsonProperties.com and sign up for our weekly economics newsletter as it applies to real estate. You can also certainly ask us any questions and let us know what subjects you want to cover. And if you want some personal assistance with your portfolio and what to do with it, please let us know. Nice to have Richard with us. Thanks so much for being here. Remember, the only thing that matters is what you do next. Be with us next week for another program on real estate investing. This is Tom Wilson with Real Estate 360. Nice to have you with us.
You've been listening to Real Estate 360 on AM 1220 KDOW. For more information on today's program, visit RE360Radio.com. That's RE360Radio.com. AM 1220 KDOW.